So short-term support on Bitcoin remains at 21,500. If that breaks, you have this little pivot low right here around 20,400 or 500. Ultimately, I'm still anticipating a fall to about 18,000 and change. So we'll see again when that occurs. But again, you do have two minor supports that you have to get through. The only thing that would change me bullish to a 30,000 target, you would have to take out this high pivot as well as this upsloping line right here. So basically, if you get through 25, 26,000, you should very quickly go to 30,000. Right now, the charts are not in favor of that. They're definitely kind of in the more downward bias camp.
Federal Reserve Chairman Jerome Powell has given the market shock after shock this week. On Tuesday, he cautioned that interest rates are likely to head higher than the Federal Reserve's policymakers previously estimated. The Fed chair cited data that inflation is no longer decelerating as quickly as it did in late 2022 to show why there might be a need for tighter monetary policy to slow the economy's growth. After a brief reaction to Powell's hawkish remarks, the stock and crypto markets recovered quickly, prompting further hawkish statements from the Fed chair. On Wednesday, while presenting the Fed's semi-annual monetary policy report to the House Committee on Financial Services, Powell again warned of higher and faster interest rate hikes than previously estimated. He said, "My colleagues and I are acutely aware that high inflation is causing significant hardship, and we are strongly committed to returning inflation to our 2% goal. Over the past year, we have taken forceful actions to tighten the stance of monetary policy. We have covered a lot of ground, and the full effects of our tightening so far are yet to be felt. Even so, we have more work to do." Powell warned that the road to the 2% target would be long and likely to be bumpy. He concluded by saying, "The latest economic data have come in stronger than expected, which suggests that the ultimate level of interest rates is likely to be higher than previously anticipated. If the totality of the data were to indicate that faster tightening is warranted, we would be prepared to increase the pace of the rate hikes." During a Wednesday video broadcast, popular technical analyst Gareth Soloway addressed Powell's hawkish statements and how they could impact various asset classes, including Bitcoin and two other top cryptocurrencies. During the video broadcast, Soloway uses a mix of an in-depth knowledge of the macro environment, decades of trading experience, and shrewd technical analysis to deliver a detailed analysis on Bitcoin and other asset classes. Before we listen to Gareth Soloway's interview, please take a little time to like this video, subscribe to the channel, and turn on post notifications for more videos like this. Also, ensure you drop your comments and observations in the comments section below. Everything helps with the YouTube algorithm, so we can continue to bring you these videos. Thanks and enjoy the video.
Number one, we have a market that's basically on the flat line. The SPY right now, the S&P 500 is trading virtually flat. This coming after the jobs data, the private sector jobs data came out. So this morning at 8:15 a.m. Eastern time, we've got the ADP private sector numbers. Now, these are not the non-farm payrolls that will come out on Friday. This is just the private sector numbers. The private sector numbers coming in at 242,000 new jobs created. That was slightly better than expected, So the markets were initially kind of flattish to positive. Then they sold off a little bit. Now they've come back up a little bit as the markets are disregarding this and honestly turning their attention back to Jerome Powell. Now you might say, well, why back to Jerome Powell? What's the big deal here? Well, yesterday he came out and he basically said that the Fed was going to be very aggressive still on interest rates. And basically, he even alluded to the chance that there could be a 50 basis point rate hike later this month when the Fed makes their decision. Friday is the non-farm payrolls report. If that number comes out stronger like the ADP number, the dollar will go higher and the markets will sell off. And by the way, that goes for cryptocurrency as well. The crypto markets will also sell off. Now, the crypto markets, let's touch base on Bitcoin here because I'm sure everyone's wondering about that. The crypto charts continue to languish. And what I mean by that is you now have a potential breakdown of this little mini bear flag right here with a short-term target of around 21,500. So we're only about $500 away from that. That would be your short-term support. Now, again, this is only a minor support. Now, this is going to be a little education I'm going to throw at you guys. All right, so what we know is that this line connects through here, which then connected through here, which then connects right through this area. Now, a lot of people think this is major support. Why? Well, this was the pre-FTX high. It collapsed. Here was your FTX high resistance, pulled back, broke out, and hit. Now, in essence, it is going to be support. So 21,500 is support. The reason I classify it as minor support versus major, and by the way, the difference between minor and major, this is important. Major support, you expect a big bounce and a significant amount of time that the chart bounces off of that level. So it could be a month, it could be 3 months, it could be something like that. Minor, you expect a smaller bounce. So you still expect a bounce, right? I mean, that's why it's still called minor support. But again, the key is minor support, you get a small bounce and it only stays above the level for a short amount of time. So again, that's the difference between major and minor. People are always asking me about the difference between major and minor support, or resistance, by the way. So this is minor. The reason it's minor is you just hit over here and you got a bounce. It wasn't even that big of a bounce, and then you came in. The other thing I want to point out to you guys, and this is a little spooky, look at this formation, all right? And I showed this in my daily analysis video yesterday, as well at inthemoneystocks.com. But if we zoom out here, look at that pattern. Does that look similar? So again, look, it's a mini-me of the bigger pattern. And so what part of technical analysis is recognizing the similarities of charts. Now, you don't necessarily, if there's no guarantee it plays out the same way, but in general, it's a probabilities game. And always remember that. So if you have a chart setup that did something in the past, and if you look at past chart setups that, 9 out of every 10 times it does, A, B, and C, well, then what you do is you say, okay, well, probabilities dictate I'll get the same ABC move. All right. Now, again, it doesn't guarantee it because you're only getting probabilities of, let's say, 70, 80, or 90%. But again, it puts you in a position to be the house of the casino versus the gambler. So short-term support on Bitcoin remains at 21,500. If that breaks, you have this little pivot low right here around 20,400 or 500. Ultimately, I'm still anticipating a fall to about 18,000 and change. So we'll see again when that occurs. But again, you do have 2 minor supports that you have to get through. The only thing that would change me bullish to a 30,000 target, you would have to take out this high pivot as well as this upsloping line right here. So basically, if you get through 25, 26,000, you should very quickly go to 30,000. Right now, the charts are not in favor of that. They're definitely kind of in the more downward bias camp.
Despite Powell's hawkish statements and warnings of higher and faster interest rate hikes, Soloway's short-term prediction for Bitcoin is still around the $18,000 range. And that's if the asset somehow breaks at least 2 support levels, $21,500 and $20,400. Do you think further interest rate hikes will be the catalyst for such price actions? Please drop your comments in the comments section below. Though the chances are slim, Soloway also predicts that Bitcoin could just as easily recapture $30,000 if it breaks some major resistance levels within the next few weeks. Which do you think will occur first? A downtrend to $18,000 or a massive rally to $30,000? Let us know what you think in the comments section below while we bring you more clips from Gareth Soloway's broadcast.
Yes, we can take a look at Solana real quick. Let's take a look at Solana. I am short in verified investing alerts. Solana, love the breakdown. We're short from north of like $25 here. So we are deep in the money on this. The next support you're going to have is going to be right here. Let me mark this off for you guys. All right. And I'll show you where I'm going to actually buy Solana. All right. So here's your next support around 1750, 1775. And then after that, where I would buy it would be right in here, right around 1465, basically a Pierce of 15. I would start to get long Solana. All right. So again, that's a good one to look at. Let's take a look at Matic real quick. Then we'll do a few stocks as well. By the way, stock wise, there's not a ton of big movers today. We'll touch base on a few of them in just a minute. You can see, again, Matic is starting to break down. I have a key buy level on Matic around $1 or just above right here. See this major support area right here? That's going to be a good buy on Matic. If it breaks through, so number one, I'm not going to buy everything that I want to buy here at the first level. Why? Because there's a dual support level. Look at the trend line. Look at the flat line right there. That's going to be my secondary buy. That'll be where I double up on the position. And again, the key is I'm not going to buy a full position to start. Honestly, I'll probably buy like a quarter of what I ultimately want to own at $1-ish, give or take. This will allow me to maneuver and trade. And next up, we got to go to gold, guys. I know you all want the gold analysis here, which continues to be my favorite asset for 2023. If you look back here when gold was at $20, 2070, interest rates were 0%. Now, we know that gold falls when interest rates rise. Now, if you had told me back then that interest rates were going to go to 5%, I would have said, okay, gold's got to go down massively from 0% on interest rates to 5%. And so the fact of the matter is we're 10% off the all-time highs on gold with a move of interest rates from 0 to 5%. That's incredible, the staying power of gold. In addition, we know this longer-term move up. This is bullish consolidation. Absolutely, I can erase these other candles, these other trend lines, because really all you want to focus in on right now is that bullish channel of consolidation. When this thing breaks, you're going to go right to the double top, which would be triple top at that point, and then you'll zoom through it. Okay, so again, my end of year target is at least the highs, the all-time highs on gold, and it should honestly be higher. This to me is going to coordinate, and the reason why you're going to get a move on gold significantly in the second, third, fourth quarters of 2023 is you're going to, number one, slip into a recession with the economy. By the second half, we're in recession, probably by October, November, I'm thinking. Okay, so that's number one. Number two, that's going to make people fearful about buying stocks because earnings are going to drop. So earnings are going to drop. That means the PE ratios, the valuations of stocks have to drop as well. That means that stock market is no longer even an attractive asset to invest in, especially with interest rates still around 5%, which they should be in the second half of this year. In addition, the analysis is showing that while inflation is always easiest from 9% or 10% where we were down to 5%, getting that last 5 to 2 is going to be ridiculously hard, which makes it an inflationary environment above 2%. So not only is the Fed going to be on hold from really doing much, they're not going to raise interest rates much more, maybe another couple meetings, but they can't, once the economy slips too badly, once the jobs numbers start to weaken, they can't raise interest rates anymore. So they're going to go to the sidelines. Inflation's going to stay high, and the stock market's going to falter significantly with an earnings recession. That is the money-making core to a breakout on gold here.
What are your thoughts on Gareth Soloway's outlook on Bitcoin, Solana, Matic, and gold? Please drop your comments and observations in the comments section below. Also, ensure you like this video, subscribe to the channel, and check out our other crypto-related videos featuring some of the best analysts in the market. Thanks for watching.